Hey guys, this is Nick from Financially Aware, and I want to do a quick video about the craziness going on in the inverse natural gas ETF, DGAZF. It's the triple inverse. So it's supposed to be that if you want to short natural gas, you get 3 times the amount of return based on what natural gas is doing. It's the opposite of UGAZ, which is 3 times up natural gas long. Just for some context, regular natural gas is down 2% on the day. So if you had DGAZF is the symbol because it's delisted now, it's on the pink sheets, you should expect to get about a 6% gain on this thing. But that did not happen. Okay, here is a chart of what it looks like. It started out around 3,000 and it went up as high as like 25,000 on the day on almost no volume, by the way, something like 2,000 shares of volume. So here's a better look at it. So does that look normal to you? It was way down here, and this huge spike, this is going back, what, till 2012. Okay, so something is really crazy, and somebody could get really hurt, or did get really hurt during this run-up for sure. I'm wondering who it is. It could possibly be any market makers that had to make a market in this stock, giving up minimal amount of shares as it goes up, and they just get shorter and shorter and maybe have to buy back at a loss. So what the hell happened? I'm not exactly sure, but this is a good reason why you should never trade something you don't understand or that is based on something else, which in this case, the DGAZ is based on natural gas futures, September and October 2020. This is the prospectus for Credit Suisse. And the regular DGAZ was delisted. And so that's why it trades on the pink sheets now with the F next to it, I guess, for foreign. And here in the notes, they say that Credit Suisse may need to consider shuttering DGAZ after pricing broke down. The exchange-traded note closed with a 645% premium to net asset value yesterday. So that means that if the net asset value of the futures was $1 million or whatever, the stock traded at a 645% premium, meaning $6,450,000. That is not normal. If you know any of these funds, they track the net asset value very closely, and anything that goes a little outside of that value, there's an arbitrage opportunity for somebody to buy the more expensive one and sell the underlying that the ETF or ETN consists of. And it says it traded as much as 3,900% above net asset value because market makers lack the ability to create new shares to meet demand. So what the hell is going on with this? I'm not exactly sure, but you really need to stay away from any of these inverse or multiple leveraged ETFs and ETNs like you've seen with TVIX a year or two ago. It just completely blew up and went to zero and everybody lost their money. So don't look at this and go, oh, this thing went up 22,000 points today, I'm going to buy it tomorrow because it's going to go up higher or something. This is some kind of fluke, and I don't know what the reasoning behind this is, but let's take a little look at the chart of this. So here's a chart today. This is yesterday, right? It basically almost, what, no trades or something. One trade here, 100 shares at 3,000, and today it runs up from 3,000 all the way up to like 25,000. And notice that it's on 10 shares of volume, this bar, this 5-minute bar. This bar here, okay, went from what, 22,890 down to 18,700 on 140 shares of volume. So this thing is going up like crazy on no volume. One of the reasons could be, and this is my knowledge from a long time ago, but pink sheets and bulletin board stocks, the market makers have a minimum requirement that they have to make a market on both sides, and it says that DGAZ has been halted. When they make a market, there's minimum requirements that they have to provide liquidity on each side based at different price levels. So if I remember correctly, under a price of 50 cents a share, they had to make markets of 5,000 share minimum on each side. Above 50 to $1, I think it was 2,500 shares they had to commit to. Above $1, I think it was 200 shares. And then, like, I don't know, maybe above $5 or $10, it was only like 100 shares. So I don't know what the minimum is for something that's trading at 3,000, but you see that these volumes are tiny, like 7 shares, 5 shares, you know, that moves the price from 1,300, 250 to 1,300, 500. So what could have happened is maybe there's only one market maker. I can't see the level 2 screen because it's halted. There's no data that I can see, but it could be that there's only one market maker or something, and as this thing is going up, I don't know who's buying it, but the market maker may just be selling the minimum amount, 1 share, 2 shares or something, and moving his price up by 100, 200, 500, thinking he's going to come back down, and he finds himself getting shorter and shorter as it goes higher and higher, and he may be scrambling to either buy it back or more buyers coming in, you know, as small as they are, but still bringing this thing up. So that could be the case. There could be some market maker that is short a lot of this just because some buyers came in and he had no inventory, and so he had to short it to them. That could be the case. I'm not exactly sure. But this is the time in sales, and you see starting at like 940 or whatever, these trades are 1, 10, 5. These are not times 100. These are actual trades. So 1 share, 3 shares, and this thing from 3,700 up to 4,900, you see it's not even, you know, it's not even like maybe 100 shares traded or something like that to bring this thing up in 20 minutes. So this thing is up on air. Don't get the idea that you're going to make $1 million on it or something like that. Stay away from stuff like this, especially stuff in the pink sheets and bulletin boards. I mean, this is like poison times poison, or as like Warren Buffett called Bitcoin, rat poison squared, because you got the rat poison of tripled leverage inverse ETN, and now the thing is delisted, so it's trading on the damn pink sheets. It's not even trading on, you know, NASDAQ or whatever, New York Stock Exchange, and there's like no volume. So this is like the perfect solution if you want to lose a lot of money quickly, because this stuff, anybody that gets into this is going to end badly. So I'll be interested to see what the real explanation of what exactly happened here, how this thing went from 3,000 to 25,000 in one day on basically no volume, and what Credit Suisse, the sponsor of the ETF or the ETN, is going to do about it. It'd be real interesting to see what happens with this. So stay tuned.